Hey everyone, welcome back to Dollar Decoded. Today's top finance story is a shocker. The U.S. government has revised its employment numbers, and the update reveals a historic drop of 911,000 jobs. That's right, nearly 1 million jobs that we thought existed weren't there. This isn't just a headline, it has real consequences for the economy, for inflation, and for your wallet. Let's break it down. So here's what happened. The Department of Labor went back and corrected its earlier data. Originally, reports showed that the job market was stronger this year, but the new revision says employment was overstated by 911,000 jobs, making the U.S. labor market look much weaker than we all believed. Why does this matter? For months, Wall Street, businesses, and the Federal Reserve have been operating under the assumption that hiring was booming. But now we know the opposite is true. Job growth was overstated, and that signals cracks in the U.S. economy. A weaker jobs market means more Americans are struggling to find work, companies are hiring less, and overall confidence in the economy could take a hit. For regular people, this translates to tougher job hunts, fewer pay raises, and possibly slower economic momentum. Impact on markets and policy. Markets reacted immediately. The stock market actually jumped to record highs. Strange, right? Here's why. Investors now believe that weaker job numbers will push the Federal Reserve to cut interest rates sooner to support the economy. Lower interest rates usually boost stocks, housing, and borrowing. But on the flip side, this revision raises questions. If the labor market is this weak, does that mean the U.S. economy is heading toward a slowdown or even a recession? And if people aren't earning as much, will consumer spending, 70% of the U.S. economy, start shrinking? These are the big risks ahead. So, to sum it up, the U.S. just experienced a historic revision, 911,000 jobs gone from the record books. That changes how we see the labor market, the economy, and the Federal Reserve's next move. What do you think? Does this mean tough times are ahead, or is it just a statistical correction that won't matter much in daily life? Drop your thoughts in the comments, and don't forget to like, share, and subscribe for more quick U.S. finance updates.